All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at ticker symbol AMC. All right, and come on, apes, show me what you got. Okay, I want to see those apes in the comment section, and I want you guys to let me know, are you actually day trading AMC, or are you guys long-term holders? Are you waiting on the short squeeze? What do you got going on? Okay, because if you're watching this video, you're probably wanting to learn how to make money trading AMC, or you're interested in that, right? So I'm going to cut straight to it. We're going to be using the Fibonacci's, and you're going to want to watch to the all the way to the end, because that's when I'm going to really break it down for you the most. Okay. So what we're going to do is we're looking at the 5-day, 5-minute chart. And I think that that is the most effective for this strategy, especially with day trading intraday. Okay. No financial advice, of course. This is just more of some tips and strategies for you guys to start learning and some education. Okay. So we'll right click and hit our fib retracements tool. All right. And what we're going to do is we look here and we're like, okay, well, seeming like a red day, right? But do we want to really short the market here, right? At 9:35 in the morning when the stock price has already dropped, significantly just in the first 5 minutes, we have a 5% drop. Are you willing to risk it because you think it's going to keep dropping another 5%? What you want to do is you want to come here, use your Fibonacci's, trade your swing lows, okay, to your swing highs. All right. And so what I mean by that is here's our immediate low that we made, and we did not go any lower. We actually rised, and we peaked right here. That was our high. Okay. So I have our swing low to our swing high. And what we get from there is a blue breakout level. And then we get green take profit levels. Okay. That's why they're blue and that's why they're green. I like a nice blue breakout level and then a green take profit level. Okay. So you can see here, and it's really best if you wait out about the first 2 hours of the market. Okay. So wait till about noon. All right. And come in here when it's noon and look at the price action and say, okay, well, this is noon right over here. Let me go ahead and chart up my swing lows to my swing highs, and let me chart up my swing highs to my swing lows. Right. So what I mean by that is, here would be our immediate high right there and then, whoops, got to use the Fibonacci's. Okay, here's our high, and then we'll take it down to this low here. Okay, and now we have a blue breakout level to the upside, a blue breakout level to the downside. What you're going to want to do is come here, right click, go to create alert at or above. Okay, and you would put enter long position. Okay, now whether that's stock, options, whatever it is, you could enter a long position, go to create there. And now you don't even have to be looking at the screen anymore. Okay. Now your phone is going to send you an alert to say enter long positions on ticker symbol AMC when we're above 1247. Right. Or you come down here and you create an alert at your blue breakout level at or below. Okay. You have to change it to below and you put enter short position here. Okay. So now, like I said, you're set up now. Okay. Because as a day trader, you have no emotional attachment to the stock. You don't need the stock to go up. You don't need the stock to go down. Right? You're going to make money either way because you're neutral. Okay. You created this alert. All right. And boom, that alert hits. All right. And then what do you know? We come down to our green take profit zone. Okay. And if you notice the very next day, that's where we opened up at. Right. So these will give you valid support and resistance levels for the rest of the day and the week as well. And you can look here and see that these were all valid. But again, this is strictly for intraday trading, right? So we're going to actually remove these old previous drawings. Okay. And it's a fresh day. We're going to come in here, and this is noon. This is right around noon here. All right. So we'll zoom in on this. What is going on? All right. And we'll come here. We'll chart our highs. Okay. Here's our high. All right. And then where did we bottom out at? Here's our low right here. Okay. And then we'll come and we'll look for our lows and our highs from noon on. And really, we didn't have, we didn't have too many lows. So, you could do something like this. I would say like maybe this is our low that we had. Okay. And you could come here and do that. All right. And put your lows to your highs, or you could come up here. All right. So let's just do that for the sake of the video. All right. And then we come and we set our alerts. Okay. We go to create alert, at or above, enter long position. Boom. All right. Create, save, yada, yada, yada. Come down here, create alert, enter short position. Okay. At or below, enter short position. All right. And again, this is going to send you an alert on your phone So you know, you don't even have to watch the screen anymore. Once it's noon, you come in here, you chart this up, and you're just waiting. You're waiting for one of your alerts to go off. And what I like to do is I like to set alerts at each one of the green levels as well. Okay. Because I need to know when I need to take profit in case I'm not looking at the screen. Right. So I would put bullish PT number 1, bullish PT number 2, bullish PT number 3. Right. And what you're going to do is you're going to start trimming and selling your position at each one of these bullish price targets, because there's no guarantee that we're going to hit every single one of them. Right. So you want to have some risk management. And you want to set a stop loss either at your blue breakout level or slightly below it, just based on your own risk tolerance, right? And all we're playing is the breakouts, okay? So we come here, we see, boom, okay, our alert got hit. So we can enter here and have a stop loss and get stopped out, right? Or you can have a stop loss a little bit lower, as I said, based on your own risk management. Or, you know, let's just say you just waited, right? Because we didn't get past that level. We hit that level, immediately found resistance, and then we broke past it here. All right. And what do you know? We hit our first bullish price target. We hit our second bullish price target, right? So if we look using this strategy, you could have entered either here, okay? And we'll take a look at the profits, okay? From here up to your second bullish price target, that was a 2.48% you know, profit. And let's look at how long that trade was. It was 38 minutes, okay? So in 38 minutes, you could have easily gotten 2.45%, right? If you entered there, and you would have had to withstand the pullback, right? And you know, maybe your stop loss didn't get triggered, or you know, maybe you just held on to your position, or maybe you didn't enter. Again, you can come here and wait on this candle and look from here to here up to that level. Again, that's only 14 minutes, and that's 2.5%. All right. So, you know, a very, very extremely effective when it comes to day trading and looking for shorts, you know, intraday trades or scalps and things like that. Okay. Now, it does work to the downside as well, you know, for shorting. So let's look for a red day here. All right. Here's a red day. We'll get rid of this drawing and we'll get rid of the previous ones. All right. And we'll come in here. Here's about noon on this day. And we'll chart up. Here's our low right here to our high. Boom. And now we have our blue breakout level. We come here, we hit create alert, at or below. Okay. And that's going to let us know to enter a short position. Okay. And what do you know? First bullish price target hits, take profit. Okay. That's why they're called take profit levels. Okay. And boom, you took some profit here. We did not go all the way down, right? So let's say you sold half your position or 20% of your position, right? And then you come back down to your breakout level. Well, now you have to decide, okay, well, am I going to get ready to cut this position loose, or am I actually going to double down and enter a new position again at our breakout level, right? Because that's what you can do is if you know that this level is valid and it's being respected, well, you can try to enter back in again. Okay. But anyways, you know, here's the breakdown. And again, you know, you want to have some type of risk management or stop loss in there, right? If you can see here clearly, there was many candles that we traded above our blue breakout level for entering short positions. Okay. But that doesn't have to scare you out of it. You know, there's no sign of an uptrend. Like we push up here, we close above our breakout level, right? But look at the next candlestick. It's a red doji indecision candlestick. The next one immediately after that pushes back down our breakout level. Buyer step back in, we come back up, but it's short-lived. We wick back down, get 2 red candlesticks, and we're seeing a lot of just choppiness, right? A lot of choppiness at this level until we really get that true breakout where we have 1, 2, 3, 4, 5, 6 red candlesticks, which is 30 minutes of bearishness. Okay. So, you know, you come in here and that's a negative 1.46. All right. Stock dropped 1.46. You buy back in, you just made 1.46 profits. Okay. So, you know, when you close your position. So again, this is really effective for the upside or the downside. And it's very effective for entering into some quick day trades, right? Using just, you know, waking up at noon, coming in and looking, all right, what is the market doing here at noon? I need to chart up my swing highs and my swing lows. I need to set my alerts for a bullish position or a bearish position to go long or to go short in the market. And then I need to set alerts at where I'm going to be taking profits at, whether it's a short position or a bull or long position. And once you start doing that, you'll start realizing, oh, hey, well, if I just stick to the script, right? And every day I come in here and I'm making 1% and I'm not being greedy and I'm just taking my blue breakout level to my first bullish price target. You do that, get 100%, 200 times, that's 200%. Okay. So within a year, you could possibly have the potential to grow your portfolio 200 times if you're a perfect trader. Okay. But nobody's perfect. So let's not try to be that, right? Or let's not try to act like we are. All right. The whole purpose of this video was to try to give you all some direction and some guidance, when looking to make plays. Okay. Because I know we all want to know some secret formula on how to get rich and how to make money every single day in the market. And, this is a nice one. Okay. This is a nice strategy. It's not 100% guaranteed. And, you do need risk management, and you can lose on it. Okay. If you would have entered here, and we came down a little bit below on the first time you got the alert right there. And then let's say we pulled up, you sold. Okay. So let's say you ended up entering here and then you sold up there. You sold your short position at a 1% gain. So, you lost about 1%. All right. So it is, it's a lot different when you have money on the table versus just watching a video and seeing somebody explaining it and breaking it down to you, right? Because you don't have, these candlesticks aren't here yet. You don't have that data. All you have is this data. And you're looking here and you're saying, oh, okay, well, boom. Oh, yeah, now we're definitely about to go short, definitely about to go short. And what do you know? You get 3 green candlesticks after that. Is that going to trick you out of your money? Is that going to, are market makers and institutionalists and hedge funds, are they going to be able to make you sell your short position for a loss? Right? Because that's what they're doing. They're chasing liquidity, right? To drive the stock down shorter, you have to have the stock to sell it, right? You have to own it. So, if they're looking to make a big move to the downside and short something, well, there needs to be liquidity, right? They're going to have to buy enough stock, own enough stock, have enough in there, trigger enough buy orders for them to have enough to sell and short it, right? And push it down. So, that's something you can always look out for. And that's just a clear sign of chasing liquidity, in my opinion, right? We know our breakout level. We're coming down. They're triggering people's stop losses on the short positions, chasing that liquidity for the big push down. Again, nice 30 minutes of bearishness right in a row. And then the rest of the day, we consolidate in between our breakout level and our price targets. Okay. So thank you guys for watching. I hope this video helped. Hope you guys learned something. And if you're a little confused on how I got my Fibonacci's, set up this way, or you want to learn how to do it yourself, I got a great video right here for you to watch. Okay. Explaining how I do it. I kind of explaining the same strategy, but it gives a really nice walkthrough on how to actually set it up yourself on your screen the same way I have it on mine, with the blue breakout level and green price targets, for you to take profit at. All right. Appreciate it. I'm out.